journey to modernize the mining sector in Rwanda has got to be looked at in the context of where we have come from and where we are today, as well as where we are heading.
The government has done what is possible in making sure that there's infrastructure, roads reaching every mine.
We all know it's changing quite a lot in the last 2-3 years, which I think is it's a very good thing. I think the Rwanda Mining Board is doing very well, or trying very well to professionalize the sector, to try and attract the people with professional skill and with finance skill.
Twebwe twaje tuzi icyo dushaka ubucukuzi burambye kandi burimo n'ikoranabuhanga, niyo mpamvu ibi byose turi kubigeraho.
So now we are providing opportunities for companies that want to go into different types of processing.
So what we are getting in the end of that process is much higher quality than is expecting by the LME. So our team is very pure, and the quality is very high.
Target is to showcase Rwanda as a hub for mining services, mining operations, not only in our region, but wider to the wider region of Africa.
We still have a long way to go, but we have a vision of where we want to go.
Welcome everyone to the Africa Mining Forum digital event. I'm not gonna lie, what a year! But what a journey so far that took us from Kigali last year to our screens today. Despite incredible challenges, remote working, lack of face-to-face engagement, we found that the mining community remained connected and willing to go through the same storm despite being in different boats. What did we learn? Juniors and investor collaboration will be the backbone of a sustainable mining industry in Africa. We've started our digital journey with AMF in August by launching the Africa Mining Tour. Since then, we've connected with thousands of new stakeholders, looking at the continent's endless opportunities and investment potential in strategic commodities. We had the chance to get the insight of key CEOs all over the globe that strongly believe in the investment in Operation Africa, and who will remain committed to it despite the constraint that the pandemic has brought into the value chain. You can catch up with all of them in our AMF TV tab. Our mining tour has now reached its final destination, and for the next 5 days, we'll be welcoming over 1,500 international and regional mining stakeholders and 50 incredible speakers that will give you a taste of the experience and outlook of the junior mining sector in Africa for today and tomorrow. Many of you would have attended numerous online platforms, event, webinar, discussion, podcast, you name it. Our industry has been shaken in the last 10 months, and this is right now our only way to remain engaged with you and providing you endless content and networking opportunity from a chat to a Zoom call. Yes, another one. During the next 5 days, we'll be looking into strategic themes that we have come across in the last 12 months and that will drive the sector going forward. From COVID-19 recovery plan to an insight into Australia and Africa connection, we will travel across the continent to understand the mineralization potential of West Africa beyond gold, the future of beneficiation and processing, the importance and requirement of ESG into the investment making, as well as the key to raise capital for juniors. As you all know, running a mine and an operation requires insane amount of infrastructure and power. This will be at the center of our discussion, and we welcome our sister partner, Africa Energy Forum, into it. The next 5 days will dissect the entire value chain for juniors to be successful in Africa, and you will hear a lot about blockchain, transparency, investment attractiveness. So, either I said too much, or not enough, but you can find all of this in the platform we've put together with Swapcard for you today. Navigate through the platform, through the different features, book your session now to make sure you don't miss any reminders and insights that could be valuable for your business through the program tab. When it comes to matchmaking, because it's not all about content, we engage you to navigate your way through the platform by making sure that you have identified valuable new leads. From the homepage on Swapcard, you can just select the attendee page, and the filter box on the left side of your screen will give you the opportunity to narrow down your research. Next, we'd love to hear from you during all the discussion that you will attend. If you have a question for our speakers, please feel free to send it through the chat box made available for each session. We'll try to answer every question during the next 5 days, but if we don't get to yours, don't worry, we'll make sure that you follow up afterwards. And lastly, we really encourage you to share your insights and thoughts with all your social network using the hashtag Africa Mining Forum. Now, without further ado, I would like to leave the floor to our incredible keynote panel. The opening will be moderated by Sheila Kama. Sheila Kama is a non-executive director, an independent consultant, and a mineral, oil and gas policy advisor with more than 2 decades of work experience. Sheila is a former executive of Anglo-American Corporation and WS Group in Botswana. She has extensive knowledge of the mining industry, the Africa business environment, and sustainability challenge in minerals, oil and gas industries. Sheila will be sharing our session today and drive an exciting discussion with Honorable Francis Gatare, CEO for Rwanda Mines Petroleum and Gas Board, Emma Wade-Smith, OBE, a Majesty Trade Commissioner for Africa at the UK Department of Trade, and finally, Hubert Denzo, CEO and Vice Chairman at Africa Investor. Now, enjoy the session, get the most of the next 5 days, and especially share it to your network in one click. Thank you.
Good afternoon and good morning, everyone, wherever in the world you are. Today's panelists are 3 very esteemed speakers. In the first instance, let me introduce myself as the moderator. My name is Sheila Kama. I'm a retired executive of the mining industry, having worked for both DBS and Anglo-American and the World Bank and the African Development Bank. I live here in Botswana, and so to say that mining is in my blood would be an understatement. Be that as it may, it's my pleasure to introduce today's subject, which is the next smart move. COVID-19 recovery plan to stimulate investment into mining exploration in Africa. And to help us understand that challenge, today we have Honorable Francis Gatare from Rwanda, and we have Emma Wade-Smith from the United Kingdom, otherwise based in South Africa, representing Her Majesty's government there. And then we have Hubert Denzo, who is the CEO of Invest Africa. And so with those few words, may I ask with you, start with you, Honorable Gatare, and ask you to please say a few words.
Thank you very much, Sheila, for your kind introduction. Distinguished delegates, on behalf of the Rwanda Mines, Petroleum and Gas Board, and on behalf of the government of Rwanda, I'd like to welcome you to the 2nd annual Africa Mining Forum. This level of, the level of attendance and engagement of the delegates attending last year in Kigali showed us that there was a need to scale up convening this forum and even to extend it to the continental level, hence changing it from the East and Central Africa Mining Forum to the Africa Mining Forum this year. Due to the COVID-19 pandemic, we have leveraged to use modern technologies to convene online, but every challenge comes with a silver lining. So let's embrace this chance to connect with more companies and individuals at a significantly reduced cost and time normally associated with international travel. The last year edition, held in Kigali, has opened our eyes to the potential business partnerships we can realize in our countries. And as the host of this forum, co-host of this forum, we promise that this edition will be more rewarding. The 2nd edition of the Africa Mining Forum is going to be a premium investment platform showcasing the business opportunities in the mining sector and also discussing ways to keep our heads up despite the effects of the pandemic across the entire value chain. And so this Africa Mining Forum 2020, I hope, will deliver a 5-day interactive session in which there will be content-led activities from more than 12 strategic spotlight sessions with international CEOs, one-on-one sessions, women in mining session, and the ministerial forum. So like many other industries across the world, the mining industry has been affected by the unprecedented force of the COVID-19 pandemic. Fortunately, Rwanda's mining sector has been resilient, and thanks to the stringent safety measures put in place, operators here in Rwanda were quick to safeguard themselves against the virus, which has to date meant that we have not reported a single COVID-19 positive case from the sector. It's for this reason that I hope to welcome you all to visit Rwanda whenever you are able to, but especially look forward to see you in Kigali next year at the 3rd edition of the Africa Mining Forum. So on behalf of everyone at the Rwanda Mines Petroleum and Gas Board, and on behalf of the organizing team of the Africa Mining Forum 2020, I wish you a productive participation at this 5-day digital event and hope you get lasting business relationships from it. I thank you very much for your kind attention. Thank you.
Thank you very much, Honorable Minister. Emma, may I come to you, please? Could you say a few words on behalf of the Department of Trade in the UK?
Yeah, thank you very much. So I'm Her Majesty's Trade Commissioner for Africa and cover the entire African continent across the full range of trade and investment activities that we have between us. As a Department for International Trade, we are the investment and trade arm of the UK government, and we champion free trade, we tackle market access barriers, we are helping UK companies to export to and invest in Africa, and we're also promoting the UK as a fabulous international destination for African businesses to grow their foreign and international activities. So our trade policy and our market access work, along with our trade and investment promotion work, is all targeted really at achieving one key goal, and that is to increase the trade and investment flows between Africa and the UK. And I'm very passionate about how we persuade buyers all across Africa to think of the UK as their business partner of choice. So when we are looking at what we do, we have a very clear purpose behind our trade and investment work. It's around championing economic growth and job creation and increasing sustainable, inclusive and responsible trade and investment. And just very briefly, at the beginning of this year in London, we had a UK-Africa Investment Summit in which we talked about the importance of supporting African countries to transform their economies, including how we can help to work with Africa to build a cleaner, greener and more resilient growth strategy. And mining, I'll get to the point, mining is absolutely essential to the clean growth strategy. And so I'm really excited to be talking about how we can see mining transition into the future to support that clean growth story. Thank you.
Thank you very much, Emma. Just to be clear, you mean Africa or you mean Sub-Saharan Africa?
I mean Africa.
That's lovely.
Yeah.
That's lovely, just to be sure. Thank you for that introduction. May I come back then to you, Hubei, and invite you to say a few words, both about yourself and your company, please. Please unmute.
Yes. Thank you very much, Sheila. My name is Hubert Danso, and I'm the chair of Africa Investor, which is an institutional infrastructure investment platform. And I also chair the African Union's Continental Business Network, the CBN, which is a pension and sovereign wealth fund leaders network of chairmen and CEOs and CIOs of African institutional investors that was established by and to support African heads of state to partner pension and sovereign wealth funds on the continent to drive long-term infrastructure investments. I think for our purposes here, the continent's potential to be a global mining investment haven cannot be disputed when Africa is the home to 90% of the world's platinum supply, 90% of the world's cobalt supply, 50% of the world's gold supply, 35% of the world's uranium, 9.6% of the global oil output, 2/3 of the world's manganese, and 75% of the world's coltan supply. And this is all notwithstanding the fact that today, less than 50% of the continent has been geologically surveyed. And the estimation is that there is at least the same amount of resources that we know today yet to be explored. That being said, Africa only received less than 1/3 of the 3 billion odd global mining exploration investment last year. So ironically, but we're pleased to be here, we recognize and believe that COVID-19 offers a unique opportunity to apply different approaches and public-private partnership models to better attract global as well as domestic shareholders, as well as innovate and assist the continent's mining sector, support Africa's integration and competitiveness in the global fourth industrial revolution. So I'm very much looking forward to participating in this dialogue and sharing some ideas. Thank you, Chair.
That's lovely. You've got us off to a good start there because you hit the nail on the head. So what's the point of having the resources if they are not, first of all, discovered, and secondly, if they are not exploited, and what's the point of exploiting them if they are not doing any good? So that takes me back then to you, Honorable Qatari. Your country has been at the forefront of attempting two things. One, to drive investment in exploration, and two, to channel any projects from mining towards downstream beneficiation. From what we can see from COVID, the world is not the same, and the world is about to change. My question to you is, in this changing world, how do you see your country approaching efforts to attract investment in mining? Has COVID changed your strategy? And if so, how has Rwanda's strategy changed? Over to you.
Thank you, Sheila. COVID-19 has affected everyone in the world, and our region has not been spared. But like the saying goes, for every challenge, there is often a silver lining around it. And for us, we have seen the silver lining around COVID to be associated with the small-scale nature of operations in the mining sector in our country, which we have leveraged while much of the world was shutting down large operations. We have found that our mining sector was very quick and agile to recover when opportunities came up for the lockdown that had initially been put in place when it was lifted. And so three things happened. One was that when the initial 45 days lockdown was lifted here in Rwanda, the mining sector received an opportunity which they seized immediately to put to the international market the required technology methods that they can resume to operate, to mine, to ship, and send to international markets very quickly. And so when the Asian markets, particularly in China, recovered and demand for these technology methods recovered as well. And prices started to increase because some of the large operations around the world were unable to resume operations. Our mining sector leveraged that agility to put the needed materials to the market, and we have continued to do that. The second thing we have done is, I think, Hubert Danso has mentioned it. In the African continent, there is always a constraint for financing exploration activities. We have seen that in the context of COVID, we needed to review some of the incentives in place to attract exploration companies. And so for the first time, the government of Rwanda has put in place a new incentive, which is a 10-year loss carryover incentive for exploration companies to be able to invest their resources in exploration, knowing comfortably that the investments put in place can be recovered through tax incentives over a period of 10 years. We are beginning to see interested companies showing interest in this new incentive. But we have also seen that in the COVID environment, it was very important to diversify, identify new minerals, new materials that are counter-cyclical, especially during the time when most metals are facing a decline in demand and international prices. And so some of our new minerals, especially the gemstones, the precious metals like gold and others, have given us an opportunity to diversify beyond some of the metals that we're relying on previously. Obviously, we also know that with all the international restrictions for travel, particularly in shipping and logistics, we needed to concentrate more in local value addition. And so some of the refineries, smelters, and local processing plants, which were previously operating below capacity, leveraged the COVID international travel restrictions to add scale to what they were doing. And this has given us added opportunities to retain value here in the country. It's the reason why we still feel very strong that the mining sector in Rwanda will begin to carry the heavy lifting of the economic recovery of this country. Thank you.
Thank you. Thank you very much. Emma, if I may come to you. You spoke very passionately about the relationship between Her Majesty's government and all of Africa as a trading bloc. And we've had how companies are challenged. I have two brief questions for you. The first is, what has been the response of British companies in Africa to helping the countries and others cope with the effects of the pandemic? The other is, have you observed any change in the way that these companies now do business, a departure, if you wish, from the old traditional business model? Over to you, Emma.
Yeah, thank you. I mean, I think what we've seen across all sectors and is as visible in mining as elsewhere is this this willingness, this intensity of UK companies to respond to the COVID pandemic in the immediate space and over the longer term as well. So you're very conscientious around how we keep workers safe, how we respond to restrictions and new arrangements that governments have put in place to keep people safe, so social distancing and all that kind of stuff. A big focus around sort of healthcare and hand washing and all of that stuff that we know is so effective actually at keeping people safe. And I think really working to understand how to continue to operate mines, keep mines open while we are facing these extraordinary times. And I think what has been really interesting to see is, of course, for large parts of the world, we've seen the demand for commodities drop as we've seen economic activity being affected. But because we've seen the mining sector sort of go into this situation in quite in a relatively good space, actually, we've seen a lot of activity across the mining sector since the 2015 downturn to really become more efficient, more cost effective, more agile, more flexible. So we are seeing mining companies responding in the moment, as it were, as well as setting themselves up for the long term. And I think, of course, the pandemic has been incredibly tough for many companies, including in the mining sector. And so I think it's driving some of these innovations, these transformations that frankly we have been seeing but need to be accelerated through the mining sector. So looking at how do miners continue to improve their operations, bring in more technology to bear into processes, thinking about how you minimize the environmental impact of a mine in and of itself, as well as thinking about how do you reduce the carbon emissions throughout the lifetime of the mine. And so some of that is consumer driven. So we have seen for some of the minerals that my panelist was talking about, we've seen consumers wanting to understand where those minerals and commodities are coming from. So traceability, so the use of big data, the use of technology to pursue that. And some of it is investor driven as well. So, following the money in support of this transformation of the investor community as well, in terms of environmental, social and governance standards. So I think that we're sort of seeing the pandemic in the mining sector, as we've seen in many other places, accelerating some of the drive behind transformation and the embracing of technology and innovation.
That is wonderful. Let me come to you then, Hubert. You spoke very passionately about Africa's place in terms of mineral wealth and mineral endowment. But you also recognize that there was a gap between the level of endowment, the level of exploration, and project development. In my experience, the difference is money. It is true that the African people, through their governments, own these resources. But often, because it is others who invest in their development, that ownership is distorted. And that's where you come in, you see. So I'm going to ask you to tell us, how can we protect Africa's capital markets? But more to the point, how can those capital markets become an active source of finance, particularly in the post-COVID era, in bridging this gap between finance coming from the continent and flowing into mining, and with that, protecting that ownership in real terms? Over to you, Hubert. You are in mute.
Thank you very much, Sheila. Absolutely, the capital markets play a critical role on the listed side, and as does private equity on the unlisted side. But I think first and foremost, I think we need to appreciate that the cheapest form of stimulus is confidence, and the ability to provide confidence and clear signals to the investment community is paramount and really very, very important. We believe that there's a great opportunity, as I mentioned in my opening comments, to reset the public-private mining leaders relationship through private sector and presidential mining investment partnerships and collaboration. And we've seen it work effectively at the African Union through the Presidential Infrastructure Champions Initiative, currently chaired by President Cyril Ramaphosa. President Kagame is a member of that. I mean, we as the CBN report into that. It's about 14 heads of state: Ghana, Nigeria, Egypt, Algeria, Kenya, as I mentioned, Rwanda. So we think that type of leadership, there's a real opportunity to have something like that at that level, focused on the mining sector. The African Union has a program with institutional investors called the 5% Agenda, which is a commitment between African heads of state and governments and African pension and sovereign wealth funds to increase their allocations in the region of about 5% of all assets under management to infrastructure and long-term assets. Now, we believe that the mining sector is ripe for participation in that portfolio of opportunity. And we've already seen a very good example from Ghana, where under the leadership of President Nana Akufo-Addo, working closely with the Ghana Infrastructure Investment Fund, GIF, who have now begun to invest in the gold mining sector in the country. And that's really sent a very positive signal to institutional investors. And we can already begin to see this model taking set in other countries on the continent. And as a consequence, the president has gained a great deal of confidence and support as a champion of the mining sector in Ghana and across the continent. But let's remember that fundamentally capital markets and private equity investments are capital raising venues and instruments whose investments are made through companies and determined on their ability to build up a shareholder base and a share premium in terms of equity. Investment in the sector is very complex and competitive, and it's forensically compared to global peers, not just African opportunities. So let's make no mistake, the investors are harder to find than good projects, and good projects are very hard to find. And if the truth be known, prospective investors are generally a time-consuming distraction if you really go into the belly of the beast and see how the machine works. So we feel that the continent only needs to cultivate a cluster of real catalytic investors to mount a strong, build back better, resilient mining investment COVID-19 response. The reality is it's easier to secure current investors, local producers, to increase and expand their investment than new investors. And it's easier to get new investors with the support of current investors and local producers. So we therefore feel that a compelling COVID-19 mining sector response to attract investment in the mining sector should be in the form of a government partnership with local producers premised on a 4-point plan to optimally increase investment by firstly expanding and working with government and local producers to expand existing mines, to assist the local producers purchase new mines, bringing in new joint venture partners to invest in that growth. And as I think we've heard Minister Kateri also mention, intentionally targeting and attracting a larger percentage of the global exploration spend. As I mentioned, last year in the region of 3 billion, the continent received less than 1 billion of that. I think that there's a very strong and unique opportunity now for governments to work with the local producers and the investment community in partnership to really be able to, as I said, it's easier to expand local relationships. We in the private sector, wherever we're going to invest, whichever sector, the first conversation we're going to have is with the local producers and the local private sector to ask how they're being treated, what the opportunities are for growth, and what the nature and the depth of the relationship is with governments. And I think the countries, like Minister Gatari has already mentioned, he's already seeing fruit because of the leadership delivered through his own ministry, and the president being a very dynamic leader who understands the private sector. They're already seeing fruits. So I really do believe that that partnership is something that should not be underestimated. It should be a very forward-looking partnership. There's a big world out there, and I think that with that partnership and taking account of our blessed endowment that I mentioned in my opening comments, naturally we are well ahead of most competitors around the world. I think we just need to really facilitate that partnership, which will unlock unprecedented levels of capital if it's properly cemented. Thank you.
Thank you very much. I'm going to come back to you, Honorable Katari, because what Hube has done is challenged host government to strike a very delicate balance, which is the need to attract finance, but to do it in what he describes as a forward-looking approach, wherein you are thinking globally but acting locally, if you wish. And my question to you is, in this space where the people of Rwanda quite rightly expect that they benefit from the minerals by striking these balances in ownership, etc., but also in a world in which you have to look outward and attract capital, but also outward to find markets. In Rwanda, how are we striking this balance between protecting national interest while not giving Emma the appearance of undue protectionism? Over to you, sir. Okay. Yeah, I can hear you now, Say. Please go ahead.
You can hear me. Okay, very good. Yeah. Thank you very much, Sheila. The notion of delicate balance is one that this year, 2020, has come up several times and that many people now are increasingly becoming familiar with, particularly the delicate balance between health and economic concerns. Obviously, during the COVID-19 circumstances, people have had to prioritize health concerns as number one, because after all, without health, then there is no economics. So the policymakers, as it were, have had to understand what delicate balance means. But in the mining sector, this is a daily phenomenon, because we all know that natural resources are the kind of wealth that all citizens of the country have got ownership claims over. Yet, on the other hand, natural resources require enormous amount of capital for them to be developed and for them to generate any meaningful value to a country. And so there is always a delicate balance between the claim of ownership of these resources as well as the reward to international capital, which is required to develop these resources. And so this debate is very important to take place between communities and governments who represent them, as well as the international capital representatives who also demand many times higher rewards in jurisdictions like ours. So our view is that there has got to be a debate, but there also has got to be an understanding that for every investment, there must be a fair and reasonable reward to it. So in Rwanda, this debate is not new, and we have come to an understanding, a mutual understanding between the investment community as well as the citizens community, that this delicate balance has got to be understood by everyone. What we are seeing as important for us here is that the investment community realizes they are corporate citizens of a country, that they are stakeholders in the development of the communities where they operate, and that they are genuinely mindful of the well-being of the citizens where they operate. Left on their own, they may not be able to realize that. And so there has to be a very strong but fair regulatory framework, which is where we come in. And we believe that we continue to provide a competitive legal and regulatory framework that cares about the well-being of our citizens, but at the same time that recognizes the imperative to incentivize international capital for it to be deployed to harness these natural resources, which otherwise left on their own may not be able to generate the kind of benefits the citizens want. What we know is that even when mineral resources are finished, the citizens will be there and will need to make use of their land. And so it's very important for us that mining sector coexists with other economic benefits that generate the best economic well-being to the citizens, particularly agriculture, but mainly looking after the environment for its long-term sustainability. So our regulatory framework is very strong in ensuring environmental sustainability as well as economic sustainability. And these are the general principles around which the dialogue between the investors, government, and the community has got to take place for continued partnerships in harnessing the natural resources. Thank you.
Thank you very much. Emma, in the world of mining, we have the large companies, and they are very capable of looking after themselves. But under that big layer of big multinationals, it's a huge number of what are called junior companies. And they are critical because they are typically the front runners for making these discoveries. And many of them find London as their home, where they raise capital to be able to make these discoveries. And I just wondered your view of how, from a policy perspective, can governments, host governments, and governments like the United Kingdom that are interested in driving British firms out into the African frontier, what are the right policies to motivate investment by juniors? And should this be primarily policy driven, or do we see it as primarily left to the market?
Well, look, I think the reason that my department exists, the reason that we have people located across the African continent is precisely to be helping companies to understand the different markets, to understand the different sectors and how those vary across the continent, across the world, but also to work with governments to create the best possible environments for businesses to do what they do best, do business and make some money. And from a UK perspective, I believe doing business in the right way and recognising the importance of ESG and upholding values and principles in the way that we operate. So look, I think that there's a really important role for governments to play here in terms of creating the right policies, supporting the right regulation, enabling the right legislation, but also, as we were just hearing, about making sure that we are creating a transparent, open and inclusive environment within which we can discuss how do we create the right environment to inspire investment, to enable companies to flourish. So I think inevitably companies need to be able to provide a service and a product to the standards that we should expect, and to be able to do so in a way that is very mindful of the impact on local communities, on the environment, and to be a force for good in all of that. But I do think that there's a really important role here for governments to create this enabling environment and to be mindful of the extent to which it is possible to create that enabling environment and still it doesn't quite flourish. And so, very much around making sure that we've got fluent dialogue between the public and the private sectors, that we are actually listening to one another and we understand what it is that investors and mining companies of all sizes are looking for to enable them to make those long-term decisions about establishing or expanding mining activities. But also that we've got people within government who understand business and therefore appreciate what some of the unintended consequences might be of legislation that comes through, frankly, of just changing the goalposts. And we know it particularly in the mining sector, because of its long-term nature and because of the high intensity capital requirements, actually just that consistency and transparency is so important. I think as well that there's a really important point here around making sure that we all have the same sort of standards and expectations, that we understand finance, not just in a case of how does a mid-sized company or a large company, small company raise money, and talk to Hubert and his team around that, but actually how do we establish these contracts and in the right way so that they are beneficial to all parties, so that we're creating a positive force for economic growth, for job creation, for environmental protections, and that's not sort of inevitable, actually. So I think it is really important that we continue to work together, to talk to one another, to bring experts on both sides together, to listen, to create and shape, drive and implement the right kind of framing policies that will really enable the continued growth of mining across Africa.
Thank you very much. Hubert, one of the headwinds that faces mining, and for that matter, all the extractives is the subject of excessive carbon footprint. And some of the solutions that have been put on the table is that if we digitize mining and move away from some of the more conventional ways of accessing the resource and reduce our carbon footprint, that might be the answer. And I wanted to just get your sense of what are the capital markets thinking about this? Is this something that the capital markets are warming towards? Is this something that the equity markets are warming towards? Or are the markets more comfortable with the traditional way of mining?
Thank you very much, Sheila. I know that we've talked, we've heard from both the Minister and Emma on this subject. I think I would really just say it's important that we have a sort of technology-driven sensitivity and vision. But naturally, global mining, digital best practice and digitization and a reduced carbon footprint will certainly make a positive difference to investors. As you will appreciate, we're predominantly and rapidly transitioning to ESG as well as the SDG aligned, Sustainable Development Goals aligned led mandates. In wearing my other hat, I also chair the CFA New York's Global Asset Owners Council, and just during last month's World Bank annual meeting, we launched the first SDGs ESG asset owners framework, which now gives us an opportunity to actually be able to measure not just the alignment, but also the potential impact, because a lot of the focus to date has been absent of data. And whenever you talk about technology and artificial intelligence and all of these great tools, there needs to be that hospitable and incentivized and enabling environment to be able to generate and create that data. And we continue to talk about a concept which we are quite committed to on the continent, which is the fact that we see data as infrastructure, and the ability to work with our public sector partners to then be able to generate insights into that data, to be able to improve economic and trade and investment related performance is a very critical tool that we certainly need to harness. But again, as I talk about, when you talk about carbon footprints, ESG, SDGs, we also need to be a little bit careful about how we approach that, because, I think Emma mentioned the British government hosted the UK Africa Investment Summit. I was there at her kind invitation. Thank you very much, Emma. And the Prime Minister made an interesting point. He said that he heard about other summits taking place, and he used an old Ghanaian saying, I'm from Ghana, talking about, we may have 5 fingers, but they're not all the same. And, we're living in, and you mentioned earlier about this globalization concept of, acting globally, but think locally or implement locally. And this transition is very different in Africa as it is for the rest of the world. So we caution investors as they focus on mitigating and minimizing the negative social impacts and fallouts of the transition. It should be very clear that we take an extra special look at the social impact of a transition, because of the fact that, we are very resource and mining sector dependent, but yet if we're not careful, everything is going to become a sort of sunset industry as opposed to a sunrise industry. So we therefore call for African mining investors to be at the forefront of the just transition and stranded assets agenda. And there's a lot of great work that's been led by the UNPRI in this respect. And it comes to the next point about when you talk about technology generally and the role of the continent. And we all know that it's well recorded that, sadly, the continent has missed past industrial revolutions, and it's imperative that we pursue a mining-driven fourth industrial revolution and the vision. And we strongly believe that vision should underscore Africa's, as just one example, Africa's golden opportunity with the gold-backed central bank digital currency market. I mean, we're witnessing, and it's reconfirmed each and every pandemic, that gold markets remain one of the most liquid in the world. And the innovation in blockchain technology is now accelerating and changing the way in which the world sort of looks at processing and investing in gold. Banks have been purchasing gold in recent years more so than ever before. I think in the past first quarter of 2019, central banks have purchased a combined total of about 145.5 tons of gold, which is an accumulation not seen by the World Gold Council since 2013. I mean, geopolitics and sort of global economics tells us that 75% of the US foreign reserves are held in gold. China's central bank is estimated to have increased its gold resources to 651.5 tons to its total global gold reserves, which stands at approximately 1,852 tons. We also know that the Central Bank of Russia is reported to hold as much as 2,113 tons of gold, with the value approaching 500 billion, and that China will soon roll out its gold-backed digital currency, while other countries have also already put out their gold-backed currency. And we've seen the EU, the British government, and 66 central banks that were recently polled are likely to have central bank digital currencies in place by 2026. So we think that it's important for the continent to develop and protect our gold reserves as the world looks to increase its gold resources. Gold-backed central bank digital currencies offer a viable and valuable alternative to fiat currency, which in the context of the African Continental Free Trade Area will accelerate intra-African trade by avoiding exchange rate loss and the volatility of currencies. So our contention is simply that given this global trend, as a continent, we must ensure that African gold remains as much as it can and should on the continent to back African central bank digital currencies, creating and resulting in mining investment flows, jobs, domestic listings for African and global mining companies, as well as global investment opportunities in the continent itself. And then just finally, there's an entire industry that is linked into this central bank digital currency and fourth industrial revolution agenda that is underpinned in one form or another by African minerals and resources. So we think that should actually form an important part of our COVID-19 economic stimulus in terms of the way that the mining sector can play a leadership role. And that sort of dovetails back into the point I was talking about, that forward-looking partnership. And I think we should have a great sense of urgency. It is not so much what's the business of business or what's the business of government. It's about what is the opportunity and how can we equitably work together to unlock that value for civil society and play our role as good global investors and economic citizens. Thank you very much.
Thank you. Well, I imagine Emma listening that to Hubert there, that if you had any doubt, you are welcome to invest in Africa. He's all but dealt with it, because he's firm that the way forward is through partnerships. But I imagine Emma listening that to Hubert there, that if you had any doubt, you are welcome to invest in Africa. He's all but dealt with it, because he's firm that the way forward is through partnerships. But he does put a fine point on the term partnerships. He thinks there should not just be partnership, but that in effect they must speak to a new order in which the balance of control, if you wish, the balance of benefits skew in Africa's favor as the owner of these assets. And so it brings me to the next question. When you think about the way forward, now that we have learned some lessons from COVID, when you think about how you could help the mining industry transform itself into this new dispensation, how do you see the contribution of Her Majesty's government through the Department of Trade in helping us reinvent ourselves in a way that enables us, the UK businesses enable us to innovate new ways? How can that be done?
Well, look, let me just start on picking up your point about partnerships, because that's absolutely at the heart of how I see it and how we as the UK government see how we build the business relationships for the future and for the long term. And we all know, business is done by people, and it's those people-to-people links that really make the difference. You have to have trust, you have to have confidence. So partnerships is key, and is part of what really drives our focus and our behaviours. And investment, driving investment flows from the UK into Africa is also a fundamental key thing that we are focused on. But thinking about mining in particular, look, I think to some extent mining has an image problem, and I think part of that is driven by processes that are for the large part, relatively unchanged for the last century. And so, as we look to the future, I think innovation and technology has to be right at the very heart of it to enable the mining sector to respond to what consumers and what investors, what governments, what local communities are looking for. And from my perspective, I see UK mining companies right at the forefront, setting the standards within the sector for what we should be looking for. And there is more still to come. And I think we're really seeing innovations coming through from the UK's strong research and academic institutions, all the way through, being commercialised, coming into play within mining companies. And we're seeing, some of our mining companies really setting that standard around zero carbon emissions over the period ahead, introducing technology to use, for example, hydrogen-powered vehicles to minimise carbon footprints and emissions. But I think the automation stuff has to be right at the heart of how we see the mining sector transition. The use of data, as we've talked about, and thinking about how we minimise environmental impact, to be sustainable, to be resilient, and actually also to be more inclusive. And certainly, over the last couple of years, we've really seen this question about the social impact of mining coming through to the fore, and also how we create a more inclusive and diverse workforce within the mining industry. And I think that is a powerful opportunity for change in the way that we think about mining and how we actually deliver it. In terms of the UK, look, I think we've got an absolutely world-class offer in our companies, and we back them across the continent to be operating, as I say, right at the forefront of standards to create that win-win sense out of mining. We've got across the whole life cycle of mining, whether we're talking about risk management, cost analysis, automation, processes, technologies, operating the mines, supporting the energy production in those mines and the related infrastructure. So I think the UK has an end-to-end offer in mining, which is very much driven by technology and innovation. And I'm really excited to see how we can bring more of that into play. I remember my very first weeks in this role and talking to UK companies that had emerged out of universities and bringing to the mining industry those innovations which would whether we're talking about risk management, cost analysis, automation, processes, technologies, operating the mines, supporting the energy production in those mines and the related infrastructure. So I think the UK has an end-to-end offer in mining, which is very much driven by technology and innovation. And I'm really excited to see how we can bring more of that into play. I remember my very first weeks in this role and talking to UK companies that had emerged out of universities and bringing to the mining industry those innovations which would be transformational and cost efficient and really help to drive the mining industry of the future.
Hubert, I'm going to ask you to respond very briefly to Emma's comments. Emma's view is that Britain's value proposition is that it has world-class companies, that it has world-class universities able to innovate not just in the science space, but also in the social behavioral space to help achieve this inclusion that you referred to about not forgetting the social aspects of mining. Is that a strong enough value proposition for you and your financial colleagues?
Thank you, Sheila. I think, look, a strong value proposition is, and we're quite passionate about this, you're absolutely right. There's some world-class expertise and pedigree and track record and capital markets that are offered by the City of London and the UK. But we also have, world-class mining companies within Africa as well. And we also have the world-class expertise in academic institutions as well. So I think that I use the word equitable, and we all know, for example, that the most productive forms of foreign direct investment anywhere in the world, but of course Africa's included in that, is where there's knowledge and technology transfer. That level of investment always seems to be more productive. So we always call for the double co, as we call it. We think that the new models at the private sector or the investor level should really be focused on co-development. So international company co-developing assets with African companies and pooling both the local knowledge as with the international knowledge and expertise. And then we also believe that we also do have, as I mentioned, a very strong pension and sovereign wealth fund community. We have our own capital. Now, what do they say? Limited means should not mean limited dreams. And that confidence factor, that our ability to put in 5% of a sort of $1 trillion institutional equity play or asset play gets access to a $60 to $100 trillion global market if the product is structured in such a way that it meets. The fact of the matter is there's a dearth of ESG related products globally. And we have, I don't know, last count, just last week, it was $130 to $170 billion infrastructure deficit that we're projected to have for the next 10 years. Yet we also have capital markets that are a little bit shallow relative to the rest of the world. So we think that if we can structure these products so that they are socially attractive, that they meet not only the SDGs, ESG, but our own African standards of Agenda 2063, which is our own equivalent of the Sustainable Development Goals, and we bring our own capital in, we think that that's the type of partnership where we actually can de-risk it, because governments will actually have capital in the game. So when the Honourable Minister talks about working with civil society, in some respects making sure that private sector is kept honest, we feel that the best way to keep that balance is to actually have the government's appointed investment professionals negotiate those transactions and create alignment. So the Sovereign Fund of Rwanda, the Sovereign Fund of Ghana will probably be much more effective at negotiating the investment terms and creating alignment by co-investing and potentially bringing some of their own portfolio companies in the sector to co-develop. Because that's really what we need to be thinking about as we look at the African Continental Free Trade Area, $3.2 trillion GDP global space. Again, we are very focused also on the, serving this market of $7.7 billion people called the rest of the world as well. So we really want to build up our knowledge, our companies, our capital markets, and we think that the mining sector offers a great opportunity for equitable and profitable and sort of commercially and socially, fulfilling partnerships between, Africa's private sector, African governments, and international partners, be they from the UK or elsewhere. Everyone's welcome if we can come at it with the right spirit of growth in this increasingly interdependent world that we live in. Thank you.
Thank you. Honourable Minister, I appreciate your patience. You have listened intently. I thought it appropriate to give you the last word. And I wanted to touch base with you on the very important subject of value addition. It's one thing to extract minerals and ship them off elsewhere. It's another to keep them longer on the African continent. And your government has been at the forefront of doing this, building one of the few smelters. And so my question for you is not so much about Rwanda per se, it's more about USA and African statesmen looking into the future. What do you think is the missing link today in Africa's mineral value chain? Why have we not gotten to that space of processing Africa's minerals on the continent en masse? Over to you, Sir.
Thank you. Thank you very much, Sheila. The aspiration for mineral beneficiation is a preoccupation of every country, particularly an African country, because almost every country in Africa has got sufficient mineral endowments to have significant impact on the development of our respective countries. And on the other hand, many African countries have put in place very ambitious industrialization strategies, both at the national level, at the regional level, and at the continental level. In fact, we have the Africa Mining Vision, which is now 11 years old, adopted at the African Union Summit level in 2009, with aspirations to harness the natural resources of the African continent for industrialization of our continent. That is an aspiration that we all share across the continent. And in fact, every country understands the importance of that. Unfortunately, we also know that to achieve that requires enormous amount of investments. While our mineral resources continue to be integrated in the global value chain, meaning mineral resources are exported from Rwanda or from our region to processing plants someplace else, say in Asia, intermediate products are made somewhere else and eventually distributed across various industries globally. And so what is missing is, in my view, two things: to begin to realize that we must break the cycle of the African mineral resources being integrated in the global value chain at the early stages of processing, but rather aim to have them integrated in the global value chain at the later levels of processing farther downstream. But there is no single country that can do that. It can only be done at a regional level. The kind of investments that Hubert was mentioning can only be done by pulling together the capacities of different countries in the region and have multiple levels of processing where each industry feeds into the other. Let's face it, at the early stages of processing, in fact, the value addition is very low. In fact, at some point, there is even a level of subsidization, of subsidy put into this processing to try and retain value, because much of the input often is energy. And so we can only get more value from our natural resources as we go further downstream in the processing of these minerals. And that cannot be done at the national level. It's an aspiration that can only be done at the regional level. Moreover, the kind of scale that is required to be competitive globally also requires that the material is sourced more regionally and on the kind of operations at the scale where you can compete in the global market space. And so what we continue to do in Rwanda, even as we attract investments in the refining, smelting, and other forms of value addition, we continue to mobilize our regional neighbors to work together so that for each refining process that is done in Rwanda, there can be another layer of processing not too far off from Rwanda within our region that then can add additional value so that eventually we can begin to participate in the more downstream value chains across the world. That is the only way that we can have significant benefits to our communities associated with value addition and beneficiation activities in our country. Look, mineral resources today are increasingly under pressure for traceability, that minerals should be traced from the mine to the processing facility and further downstream so that we can avoid the kind of illegal or illicit activities associated with, with illegal activities around the world. And we can only achieve effective traceability of minerals at the regional and continental level, not at the national level, especially given the kind of border relationships that each country has got with their neighboring countries. And even at that level, a regional approach only can sustain or sustainably put in place a framework for effective traceability of minerals. Other than that, at the country level, it would be impossible to implement that alone. What does it require, Sheila? It requires for us to begin to work at the regional level and setting coherent and aligned policies that actually support each other, that support trade in minerals across boundaries, that more or less integrated within the African free trade area, so that mineral oils, raw materials, intermediate products can effectively be able to move cross borders to support the industrial investments across the region. So in my view, that is the next level of mobilization for investments to ensure that effective beneficiation and value addition of minerals in Africa can begin to benefit our local communities. Thank you.
Thank you. Well, there you have it. We've come to the end of the panel discussion, and I think Honorable Katari has ended on a very clear note. The answer is mine locally, process regionally, and trade regionally. And that is the only way we can galvanize enough expertise, enough resources, whether it's energy or infrastructure, to be able to compete with the rest of the world. I hope that your colleagues on the continent hit your call, Honorable Katari. And what's left for me is to thank you and the panelists for joining us here today, and also to invite the audience. We have a live audience, we have questions for us, to stay on the line and to communicate with us, but particularly yourselves as the panelists, as undoubtedly you have given them food for thought, and we look forward to a vibrant discussion of some of the more important issues that we raised here today. Thank you very much. It was really nice moderating this discussion.
Go.
Welcome everyone once again to the Q&A session of this forum. Before we get started, I want to apologize on behalf of both Emma and Hubert, who are not able to join us. But if you did send any questions to them, please visit the platform, as I'm sure they will make time to respond to your questions. I thought I was lucky and that I would get away with not having to answer any questions as a moderator, but as it happens, somebody has sent a question to me, which also happens to be the first question. And the question reads, Sheila, what will be the biggest challenge that investors will encounter when investing in Africa in the mining sector post-pandemic? I think, first of all, it's important to recognize that contrary to the implication that investors are a composite entity, actually, investors are not a composite entity. They speak to different issues, they speak to different sense of risk, they have different levels of risk appetite. And so it's important to recognize that one can't presume that investors will respond in the same way post-COVID. I think that's the first thing that we should understand. The second is that mining has different industries. During and after COVID, different industries in the mining sector will offer different opportunities. And I think it is the assessment of these opportunities versus reward, risks versus rewards, that is likely to inform the responses of investors. Two things I think will influence how investors perceive risks and rewards. The first is the climate change imperative. I think for the foreseeable future, this is the overarching imperative that all investors will look at. The second is the ever important notion of license to operate. I think it is these two things that have put GES ratings at the heart of investment decisions. And my sense is that however investors approach this, whatever the analysis is, topmost will be, where do I come out in the area of GES ratings? And all of those will be driven by the need to mitigate the risk of climate change and the need, on the one hand, to secure the moral license to operate. In terms of things that are COVID specific, my sense is that COVID itself will come and go. It isn't COVID we must obsess with. Instead, I think it is the threat of health pandemics en masse. Some of them will be in the form of viruses, others may be in the other forms. But I think it is more how that defines the workspace and how that defines risk that will be so critical in the minds of investors as they ponder the post-COVID environment. So that was me as the panelist. Now I switch heads and I'll now pose the question to Honorable Kotare, if I may say. The question is, do you think the acceleration of innovation and technologies brought by the pandemic into the African mining environment will be positive, or will it be putting in effect local workforces at risks, and therefore will limit job creation opportunities? How do you see this playing out, Honorable Minister?
Thank you very much, Shida, and I appreciate the questions from the audience. Innovation and new technologies in any is always a net positive because it's generating new knowledge and new ways of doing things, and therefore tends to have a net impact on increased productivity and with the extra knowledge and technologies, it's always taken very positively. Now, depending on the initial conditions of the use of labor force in the mining sector, that's perhaps where people begin to ask questions. In the context of Rwanda, and I think much of Africa really, the initial operating conditions are such that there is still sufficiently large numbers of people operating in the mines. And let's not forget, operating in mines still remains a very, let me say, health and safety conscious sector, because it's a risky environment to work in. So much of the innovation and new technologies post-pandemic will be mainly focusing on the heightened concerns about the health and safety of the workforce in the mining sector. Looked at it from this perspective, it's obviously, and leaves no question, that it will be a net positive impact to the mining sector in the sense that it will be addressing the problem that already exists in the sector about health and safety of the workforce. But also, I think that many investors are going to be looking at how to reduce the numbers of people working in the mines. And where you already have fewer labor in the mines, there could potentially be increased replacement of human labor replaced by equipment. Certainly, this trend had already been ongoing. It's not an issue of the pandemic, nor is it any new innovations. But what it will do, it will probably make it more rational and make it probably more feasible for many companies to deploy increasingly more modern technology and equipment in the mining sector. But from the perspective of mining jurisdictions like ours, where already there are large numbers of people working in the mines compared to equipment and technologies, these new initiatives will increase not only productivity, but also increase the health and safety of the workforce in the mining sector, which inevitably is a net positive for us. Thank you.
Thank you very much, Honorable Minister. I'm glad that you embrace rather than resist, because in my view, it doesn't matter how far back you go in human development. Technology has always been the game changer. We started off with Stone Age, we went to agricultural revolution, the industrial, and really the difference in those periods is the complexity and the sophistication of the technology. And so the idea that someone, a policymaker, might dig his or her heels in and says, no, I will not embrace technology is unthinkable, because that would risk the capacity of Africa to attract investment. I'm thinking about my own experience here in Botswana in the mining industry, here in the diamond industry, to be specific. As far back as 20 years ago, Botswana's diamond mines leave the mine and they go to the sorting house and they never feel the human hand. And that was 20 years ago. If you go to Pilbara and look at the iron ore area there, a huge part of the operations are monitored about 1,500 kilometers in Perth. And there's just a handful of people. So the notion that we can debate technology, for me, is outdated. The question really is, how does Africa capitalize on this change to create jobs? I think that is a more important question than whether or not we should embrace technology. And for me, the answer is we revisit, one, our education system, right from the get-go, and make sure that our education system embraces technology in the way that it is administered, but in the content of the subject matter, so that as young people come out through the education system, we have a new generation. And to me, I think unless we create that critical mass of a new generation that embraces technology en masse, then my sense is that, yes, we will miss the opportunity to capitalize on the jobs that come out of designing, manufacturing, and using technology. So I welcome very much your positive attitude, and I hope that your peers on the continent share the sentiment. But I have another question for you, if I may, from a participant. Did you want to say something?
Yes, absolutely. Just as a follow-up to the point that you complimented my initial response. In fact, when one sees some of the indirect benefits of the COVID pandemic to the mining sector, it is associated with what you see as the challenges of the mining sector, perhaps especially associated with the logistics and international travel, with the acquisition of inputs, with international shipment of the mineral products, and the idea that now most of the industries are looking for neighborhoods for sourcing their inputs and having the value chain that is integrated not only at the national level but at the regional level. So with new technologies, it's going to increasingly reinforce the fact that countries are insisting on local beneficiation and acquisition of local and regional content to supply the mining sector. And so the larger benefits to the mining sector has never, ever been associated with employment of the people in the sector, but rather with the procurement of inputs that go into the mining sector. And now the pandemic is offering an even additional reason to argue as policymakers that it makes a lot of sense to have local procurement for the inputs, but also to have the integrated linkages between the mining sector and other industries within the nation or regional economies, which in itself is a result of the innovations that are coming up recently.
That's wonderful. I'm glad you raised the subject of beneficiation as an important source of economic value, because the next question speaks to that subject matter. And basically the question is, what is being done in Rwanda to guarantee a beneficiation and processing industry in future?
Thank you, Sheila. That's always an elusive question that every country that has a natural resource sector always aspires to achieve. In fact, part of the challenge has got to do with the legacy of past economic relationships that have established local mining jurisdictions as source of raw materials and international processing facilities elsewhere. Now, to break that, every country that has done it and achieved, and Sheila, your country is a typical example that has succeeded in this. It hasn't come easy at all. In fact, it has come at a very high cost, at least in the initial stages. And so what we are doing in Rwanda, first of all, is to put in place a policy framework that aligns with the Africa mining vision, which aspires to create regional linkages, so that what we are doing in Rwanda not only builds on what our neighboring countries are doing, but reinforces each other, because we have to have the kind of scale that will build beneficiation facilities that are capable of competing with comparable international peers. But secondly, we've got to have the kind of enabling environment, not just the policy environment, but the physical environment that supports beneficiation to happen, especially to deal with the cost associated with that. This includes the infrastructure, physical infrastructure for road networks, for the supply of electricity at high quality electricity at affordable tariffs, the supply of water, but most importantly, training the skills that are required to deliver on the beneficiation agenda. And so for us, we think that beneficiation is going to be the key to deliver the benefits to our economy coming from the natural resources. Let me say this though, that today we are seeing that increasingly companies also understand that their long-term license to operate also requires them to understand and become aligned with the national policies. We no longer see big resistance from companies to investing in beneficiation. We are starting small with initial levels of beneficiation, particularly in our metals industry, through smelting, refining, and we are working with our neighboring countries to see if we can have additional product development from our own minerals that then can go to the international market. Let me say this. This is particularly critical as we go into the electric vehicle revolution, because our region here in the Great Lakes region that produces enormous amounts of cobalt, lithium, nickel, and other battery metals has got a huge potential for impacting on this revolution globally. And we in Rwanda are particularly planning and positioning ourselves to become one of such hubs in Africa that will provide beneficiation services for regional minerals to the international market.
Thank you, sir. I have a question here, which apparently is directed to me, and it reads, in addition to finding investments related to mining, is there an added initiative by governments to fund greenfield exploration in order to discover additional mineral resource potential? So different countries have a different position on this subject of whether or not governments should invest in exploration. But there are generally two schools of thought. The one that says exploration per se is not the business of governments, but is the business of the private sector. And that the business of governments, on the other hand, is to create a climate in which they can attract that investment, either because of the environment being seen as less risky from a financial perspective, or because governments have got data on national mineral potential to reduce the risk of, if you wish, coming in completely without any data. And the alternative school of thought is that is where governments should invest. Governments should invest in understanding the national geographic layout enough to inform mineral potential, but not to undertake investment themselves. My own view leans towards that, because I really do think that the role of government is to create an environment for investors to operate and operate fairly and transparently, and to then use the tax revenue and others to better the lot of their people nationally. So my short response is some countries are putting money into investment, into exploration and in greenfields. My sense is that that is not the best use of public funds given the circumstances, that investing instead in mapping at a very high level the geology of the country, availing that information in the public domain to demonstrate what the potential is, and then to use that to compete to attract investors in exploration is a much better value proposition. I'll move to the next question. The next question, it turns out, Minister, is for both of us. And if it's okay, I'll ask you to go first. Here's the question. The question reads, actually, it's a very similar question to the one I just answered. So I won't waste time reading it because it speaks to the same idea. And maybe I just ask you to comment then on this idea of governments undertaking exploration.
Thank you very much, Sheila. My position is fully aligned with what you just explained. And the two schools of thought usually are associated with the economic conditions of the country that adopts whichever policy they choose to. There are some countries which do not find that they need resources coming out of their minerals for development or any other purposes. And they would choose to leave exploration activities to the private sector because they see the mining sector as one of many other business sectors that government should not get involved with. But in the context of a developing country, we do know that every dollar that is injected into the economy is very important for development. And so the natural resources sector tends to be one of those sectors that can quickly generate the required revenues to spur development of a nation. And so you cannot leave it entirely to the decisions of private investors for as and when they choose to carry out exploration. Let's face it, for any mineral resource to be developed and therefore put on the market and any revenue to be obtained, the starting point is exploration. And so any developing country that sees this requirement has got to find resources to carry out initial exploration. Moreover, we all know that along the lifespan of any mining project, there are different levels of commercial risk to the project. But mining generally is a risky business. And early levels of exploration is the highest risk level, let me say, the highest level of exposure into mining sector. And so it's going to be very difficult for any private money to go into exploration without some level of de-risking, and therefore providing leading information to suggest that there will be at least some probable discoveries. And so our position in Rwanda is that that kind of high level initial exploration has got to be undertaken by public resources to try as much as possible and de-risk mining sector or mining projects by giving out information that is available so that it becomes interesting enough for companies to want to put their own private money into it. So let's say, for example, the initial level of exploration that we have undertaken in Rwanda is the airborne geophysics survey to make sure that the entire surface area of our country is understood from geophysics properties point of view. This is the first level. The second level is then to go on the ground and also carry out a national level geochemistry survey so that we can pick samples from valleys and river streams and top of the hills, and we get to understand the geochemistry of the country. The third level then is to also understand the geology of the country. And when you have these three layers of information, you are able to use the technical knowledge of experts to then begin to see where potential minerals exist. And we map out areas of interest. This is the fourth level of exploration where we map out some of those large regional blocks that were then, as a country, we are able to narrow a little bit further into potential concessions. Now, when we have this kind of information available, easily accessible and available for free, we begin to see companies then taking interest because now they do not have to run around the whole country, but they can focus their detailed and expert knowledge to specific areas for more detailed exploration. It's this kind of de-risking of the country's mining potential that generates private investments. Now, this works for us, but for different jurisdictions, they may take a different approach. But because we are an area that is relatively underexplored, we do not find it convincing enough that we should leave our country purely to private capital for initial levels of exploration. Thank you.
Thank you, Honorable Minister. I like your turn of phrase, which is de-risking, because that is really the key. And that is what research has proven makes countries competitive by undertaking that initial work and therefore de-risking. And it is that perception of limited risk that entices companies to come in. In any case, thank you very much for a very insightful response. I imagine investors will welcome that piece of information. Well, and to the participants, thank you very much for being with us today. We have come to the end of the Q&A, and as I said, if you have questions for Emma and Hubert, they will answer them online. It has been a pleasure being part of this. I hope that everybody has found it helpful, and I look forward to engage more on these important and constructive conversations as we try and move Africa's extractive resource development conversation to a constructive level. Thank you very much for the opportunity, Minister. It was lovely to see you again, and I enjoyed listening to you as usual.
Thank you. Thank you very much, Sheila, for your wonderful and knowledgeable moderation. I'm looking forward to interact again and pick your wisdom and detailed expert knowledge on the sector as always.
Thank you so much, Sheila, and our exceptional keynotes. I think they truly set the tone for our first session. And I don't know about you, but I already picked up some interesting statements from a panelist. Honorable Gattari confirmed that there has been not a single reported COVID-19 case in the sector in Rwanda. That shows quite an encouraging sign of recovery, as the sector has been quite quick and agile during the pandemic. So despite the challenges that the pandemic created for international trade, Emma Wade-Smith, on her side, has confirmed the commitment to increase investment flows between Africa and the UK to contribute to a sustainable, inclusive and responsible trade. We have to find silver lining everywhere, and we're happy that Emma reminded us that COVID-19 has actually accelerated innovation and invention in the mining sector. We'd like to thank you all for your participation today in the panel and for the question you asked to our panelists. We're sorry we ran a bit late, but you know what? I think we all agree that this keynote was worth it, and then we get a great input from our panelists. Without further ado, I would like to jump straight away in our next session, which is looking at the Africa and Australia connection. And again, if you haven't been watching the session with us today, you can still watch again on our Watch Again tab and also connect with our speaker at a later stage. Thank you very much and see you later.